to make that historic ninth speech, and very clearly the changes that happen in terms of the budget presentation will be very, very significant. Remember, budget making, budget presentation, budget timing, all have been subject to change. And I'm reminded as we see those visuals on the screen, and as my colleague Sakshi Batra also joins in, I am reminded of that debate that happened quite some time ago with regard to changing the date of the budget presentation to perhaps the first week of January to align with the calendar year as is followed. Remember, viewers, we have a fiscal year concept beginning 1st April, ending the 31st of March. And there was a bit of an exercise that was done on it. Eventually, what really came of it was the budget being brought forward by almost a month to the 1st of February instead of 28th February. But given the nature of government account keeping, ultimately remember that the union budget is at its core and at its heart a statement of accounts of the union government, and therefore that not coming through. So we are pretty much set on the date of delivery of the budget. The time, as we know, is now also fixed, and therefore the change would obviously be what will Part B be all about. Once again, to reiterate, Part B, the finance bill, tax changes and other changes. The hint really that we have is that it's all going to change. In fact, our colleague Karishma Asudani, who broke that story yesterday evening, hopefully we will get her on air with us in the next half an hour before the pre-open of the markets come in. Sakshi Batra is with us. Sakshi, coming to you, tell us, what is the market really looking forward to? Anurag made that point. Please don't surprise us. Let everything remain on track, and we are fine with what you do. We are also perhaps fine with higher taxation. Just don't roil the turf. What do you think, Sakshi, market makers are expecting?
Good morning, Siddharth, and good morning, Shell. It's an unusual Sunday, and we're all here early in the morning waiting Finance Minister to open her kitty of goodies for everybody in the country. For markets, of course, remember we are going in with some losses. All this month of January, the Nifty has fallen by 4% from its all-time highs that we hit on the first trading session of January, right after the holiday that we opened up. Now, remember, we've also seen that the Nifty banked a bit lower, about 1.5% lower. The IT index is down by 17%, and so is Reliance Industries, the biggest boy on the stock markets, 13% lower from its all-time high levels. So the markets are weak, the sentiments are weak. Foreign investors in the month of January have pulled out 40,000 crore rupees from the Indian markets, and that's where the key question is, whether the finance minister will do something to revive the investors' sentiment. Always we have this expectation that 2 years ago, the LTCG that was hiked, there should be some relief on that, if not for everybody, for foreign investors. But as in how I'm speaking to most of the market experts, they believe why only for foreign investors? Domestic investors that have been holding on the weight of the markets for the last 2 years, they should also be given some relief on that. At least on the STT, the securities transaction tax, there should be some easing. Of course, we are going back with big expectations. Whether the government will do something is a big question mark on that account. But even the slightest good news there will be taken up with both hands by
Sakshi, you made that point, and Shell, come in on this, because I was reading some data and analysis by the State Bank of India, SBI Securities, and it says that the Nifty has shown a pattern of closing higher in 12 of the last 15 post-budget weeks with an average gain of 2%. Is that script likely to be followed again this time?
Well, Siddharth, 2 points in favor of the market. It's very light. As Sakshi mentioned, a 4.5% cut on the Nifty in January alone. And this makes us the worst performing global index for the month gone by. We are looking at auto data coming in today because it's the first of the month. In any case, rupee, bond and call money markets are closed. So the focus will be only and only on the Sensex and the Nifty. You might see a bump up, but the problem is that Anurag's friends, foreign institutional investors, will take this opportunity to again press sales. what you see 41,000 crores being taken out in the month of January is the highest in 5 months. And that's a very, very painful start to a new calendar year. And to your point, if we are coming on 1st of Jan next year for the budget,
no, that's not happening. That's not happening at all. That's not happening. I was
holiday
talking about the
schedules will be
past.
upset.
Absolutely. Anurag, you wanted to come in on that because just to be clear, that's not what I was hinting at.
No, so by the way, Siddharth, I should not miss this out. I listened to your coverage from Davos. It was superb, right? So kudos to your team, and I listened to quite some insightful interviews from you over there. Okay, so look, in terms of Shalji, this is the point I was trying to make.
We have some live visuals there coming in from Finance Minister.
Entering
walking
Parliament.
Yeah.
Go ahead, Anurag.
I always like these VIP visuals like this. Is just so unique that we do. Yeah, the car is moving.
This is part of Indian television, Anurag. We kind of like things spiced up.
I love it.
We also showed you a wonderful wintry Delhi morning. Anurag, I am sure you have great memories of this city.
Oh, absolutely. Always love this. So, so look, I think the Indian markets will, I think FII exiting will stop if the markets take a well-deserved correction. Honestly, and we've seen people say Korea rose 80%, Brazil rose 30%, Argentina 50%, all of that, all global, even Europe worked for 20% last year. Emerging markets as a basket was 30% up. Here is the point. All of these markets have taken a severe beating after 2022, which is the Ukraine war, right? So for 2 years, they took a sizable correction. Even S&P went from 4,800 to 3,500, right? And then came back from there. Indian markets have not taken a correction ever since for the last 5 years, right? So if the market is at a very attractive level, some sellers will come in, right? And by the way, I've been on record and everybody knows this now. If $100 is sold in Indian markets, 30 comes from FIIs, but 70 comes from domestic money, right? So it's just, markets are very efficient. They're working fine. You have to see whether you want to be on the buying side or the selling side, right? It's working perfectly fine. And if you think the valuations are pretty high, well, it is then. Here is a point maybe I would like to leave with that. Because the expectation, because of this rupee depreciation every year of 3% and the capital gains, another 15% gone, Indian markets work pretty well for foreign investors if they grow by 15%, right? Because then they can sniff out some 10% return on the capital. But with the nominal GDP at 9-10% and earnings growing by 10%, that leaves a little room for markets, for foreign investors to make money on that. So that's the limited equation. I hope we hear something from the FM on this.
One thing, Anurag, that we will also hear, and viewers, this is going to be a once in 5-year development really, is the tabling of the 16th Finance Commission report, that constitutional body headed by economist Arvind Panagaria. Now, what is at stake here? There are multiple issues that confront this Finance Commission, and we are focusing on the macro for a moment here, viewers, so bear with us. Between the 11th Finance Commission, which was from 2001 FY to 2005, the state's share of the tax revenues has gone up from 29.5% to 41%. 5 finance commissions implemented during this period. The 16th will also come today as the finance minister tables the commission report with an action taken report. And this at a time when GST has already been implemented. So if you look at overall spending urges and directions, the states is where a significant amount of action and also state level capex happens. There is also the argument around the welfare state becoming bigger. But with the states getting more and more of the kitty, a lot of attention, frankly, I think will also shift and should continue to shift towards state budget. So Sakshi, Shell, that's also one of the other macro elements that we need to focus on in today's budget. It's of course a separate exercise. It's not part of the budget document, so to say, but this is also very, very significant in terms of the money that the states will ultimately have to spend.
Absolutely. Thank you so much, Anurag, for being with us. And let's keep our fingers crossed for the budget speech and see what really happens in. But we have some more guests joining in. We have Gaurang Shah, Senior Vice President, Geojit Investments, now joining in. And we also have with us Vaishali Parekh, Vice President, Technical Research from Prabhudas Lilladher. Good morning to both of you. Good to have you with us. Gaurang, to you first. You've seen so many budgets. What is going to be different this time? Of course, it comes with a backdrop of a lot of geopolitical tensions, the US tariffs yet again knocking our doors, and perhaps in a severe fashion than in 2025. How would you really look at what is the opportunity that the finance minister is going to make of it?
Sakshi, thank you so much for having me on this show this special Sunday morning. Very unusual. All of us are working this Sunday morning. Thanks to the government and the finance minister. Morning to you, Sakshi, to my good friend Shail, and of course to my friend Siddharth, whom I've been talking after a very long time.
Good morning.
And morning to Vaishali as well. So a small disclosure, because we may go into stock specific, that all recommendations that I'll be sharing this morning are a part of our fundamental research team long-term recommendations. Our company Geojit or myself do not have any personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines, so they might have that investment interest. So, Sakshi, to answer your questions, I think the wish list is never ending when it comes to the expectations from the Honorable Finance Minister, but we also have to understand that there is a tightrope walk that the Finance Minister has to do between growth, fiscal prudence, and creating opportunities and attracting FPI. So I think some parts that my sense is, and I hope I'm right on it, budgetary allocation towards defense is going to go up. Capex, infrastructure creation, creating employment, simplifying complex tax structure as far as foreign FDI is concerned, and of course a large expectation towards long-term, short-term, etc., etc. And of course, last point is boosting consumption by giving that extra spendable income on the hands of common citizens. So this is a large perspective, and I hope that the topmost priority will be fiscal discipline and, of course, creating growth opportunities.
Right. Good morning to you, Gaurang. A very warm welcome to Vaishali, and a little later, Vineet will also be joining us. But Sakshi, I've been holding myself back for the last 15 minutes. Notice the halo around Siddharth's head.
That's where the enlightenment.
Right. And you know why that has come? Siddharth spent a very fruitful 1 week in Davos listening to everybody who has a voice on global trade. And
there's a horn on your head also. I can see that bull is
I have been an eternal bull. People will always bear me out on that one.
Let's go to our guest.
Okay, but I have one question for Siddharth. Siddharth, a quick one. What were the 2 or 3 things that you learned from Davos? What are they looking forward to in terms of the budget?
So
and how do they,
the age of super intelligence in AI is upon us sooner than later. Our IT industry, which is a powerhouse in the Indian context, has a massive challenge coming at it, and some companies, including the likes of Coforge, are taking the inorganic route towards it. But on the whole, while Indian IT is intellectually fully aware and grappling with it, I think the pace at which technology is moving, over the last 3 days or 4 days alone, we have seen a community of AI agents sort of become semi-sentient, and that is perhaps the future that we can see as far as AI is concerned. Apart from that, I think at a macro level, the G5 is splintering. America is isolated, and it works for us. And finally, the big headline really at Davos was the EU commissioner announcing that the mother of all deals will happen with India. I have never seen India come into focus in that manner. So, Shell, Sakshi, that was clearly one of the biggest headlines from there.
I think the big question then is, after mother of all deals, will this be the mother of all budgets that the finance minister truly presents here today? Vineet, do you think that is a possibility?
Yes, I think it would be a very positive one for this year. And, we are seeing the change in the text and content of the budget where, we are going to present more of, futuristic, ideas, roadmap for the future that is going to be added. So I think we're going to see this play out very well. And I'm in a very dovish on a lot of aspects because, I think that we've seen a little bit of negativity around the UGC, this thing. And, I expect that, there will be a lot of positivity playing out on the elections that are forthcoming. And hence, I think that it's going to be a very women-oriented budget, especially for the, the lady of the house. So I think I'm looking very optimistically at what things are going to play out. Very, very dovish on what kind of, things are there on the platter of the finance minister.
Right. We'll welcome our Lady Luck. Vaishali joins us from Prabhudas Leeladhar. She's been giving us fantastic calls on the long and the short side for the last 36 months or so, and therefore our Lady Luck. Vaishali, the first and the foremost question in the mind of every trader is the best part of silver and gold rally behind us.
Very good morning. Yes, so that was always the flavor of the season right now. But now we are seeing that, yes, metal index, especially gold and silver now, we are seeing a downward trajectory. So I think silver also, to my understanding, the way it's falling, we can see it going towards 280, 250 levels. And gold also, I mean, we have seen good run up. We've seen nearly more than 200% return in the last few months. So I would say that yes, these metals are going to take a breather. We may see some corrective move, and along with that, we are also seeing some exhaustion coming in the metal sector on the whole. So I would be worried at these stocks now.
One point I'd like to mention, and I'll request the PCR to kindly draw the chart of the Nifty Metals Index. Siddharth, on Friday, there was a 5.2% plunge on the metal index alone. And that comes after a 29% rally from a low in December 9th, 2025 to 29th January's peak close. So that's the run-up, ladies and gentlemen, a very narrow but a very strong bull market only in the metal sector. While the rest of the market pauses. Let's get...
I wonder how much of it really has to do with fundamentals. Is it that because of industrial demand, for example, for silver with particular reference to new and emerging technologies, is it that, or was it just a safety bet that kind of saw everybody piling in from fear of missing out, that FOMO factor? I don't know if Gaurang, you have a view on the question that Shell asked. Is this really fundamental or driven by other factors, and that's why the pullback too seems to be profit booking?
So Siddharth, our view is that after a brief pause on the precious metals pack or a profit booking, our sense is that from a long-term point of view, the momentum is still intact on the upside. And the reason why I say this, Siddharth, is because look, there was, of course, like you mentioned, there's a mix of all these things. One is, of course, geopolitical tension, flight to safety. Other is on and off scarcity of supply. Third is central banks lapping up gold to a certain extent, increased number of footfall in ETFs. And as we all know, underlying securities, precious metals for gold and silver ETFs, you have to have physical gold and silver ETFs deposited with the authorities, and then only you can come out with new units as far as gold ETF is concerned, or even mutual funds are concerned. And of course, applicability in terms of industrial use and newer technologies. So silver did a phenomenal run over the last year and a half or two, Siddharth. Maybe there is a brief period of pause, profit booking, which is absolutely okay and healthy according to me, and it will definitely give opportunities for all those investors who are living in that FOMO factor. So if you're asking me from a 3-year plus kind of time horizon for precious metals, gold, silver, definitely there is more upside. And let us not forget, this is a pause in terms of geopolitical uncertainty. I think if there is going to be more such unpleasant situation unfolding, you will definitely see once again flight to safety. So I would say that, and unfortunately, Siddharth, in India, there is no product with respect to platinum, because platinum has also given a good decent run. But unlike gold, silver, you don't have any other platforms to invest in platinum. So long term, the uptrend is still intact.
All right, let's go across to our colleague Karishma Sudani, who's been tracking all the pre-budget news coverage for us. And last night she also broke the news that this time around there could be Part B speech that could be longer. And this could be a breakaway from the tradition of almost, 75 years, Karishma. Give us an understanding. What's the mood on the ground?
It's actually ninth consecutive budget of Finance Minister Nirmala Sitharaman, and on an average in the past 3 to 4 budgets that I have consecutively covered, her speech has varied from say 108 minutes to that of 80 minutes. On an average, let me say that's about 80 minutes. Under 80 minutes, the emphasis on Part B was usually around 35 minutes as per my research. But this year, this budget, we're expecting that the announcements on direct and indirect taxes is going to be way beyond the usual, which means that her emphasis on talking about taxation, on reducing the compliance and on easing the taxation reforms is going to be the crux of major announcements. Let's not forget that when the GST rationalization exercise was conducted back in the month of September 2025, Finance Minister Nirmala Sitharaman had also shared out there vocally that her next agenda, her next task to do is going to be on simplifying the customs taxes to make import duties better and simplified to reduce the slabs when it comes to the custom duties and to make it easier for the trade deals also to happen in terms of lesser compliance. So that is going to be the crux of today's announcement. Of course, besides the fact that government has been big on its drafting its fiscal path, this year onwards they are also going to move their emphasis from the fiscal deficit to that of debt to GDP ratio, which has also been announced by her a while ago, and continuous emphasis on capex. Just in few moments from now, minutes from now, Finance Minister Nirmala Sitharaman will walk along with her A-team, the creme de la creme of Finance Ministry, as we call the budget makers, which constitutes a mix of veterans, stalwarts who've been a part of budget making exercise for a while now, along with new joinees as a part of the budget team who are experienced bureaucrats, and at the helm of it, two women participants, one Secretary Department of Economic Affairs, who's Anuradha Thakur, and of course the Finance Minister herself.
Absolutely. Thanks a lot, Karishma, for all of that. All right, let me just quickly go across to Vineet once. Vineet, what's your quick understanding? Tell me in one sentence, what is your big expectation?
Going to be a plethora of ideas that are being presented, which are going to be very positive for the market. So gung-ho on the the announcements that the finance minister makes.
Okay.
Sakshi, I think one of the most important questions got left, which we should have asked from Karishma, which is all fashionistas like you would be really concerned about
what sari she wears,
what texture, what color, which brand, and of course, which part of India is she representing today in Parliament. So that Karishma, I think, can Karishma hear us, PCR? Yeah, hi Karishma, Shell this side. Sakshi and I were just discussing the color of the Finance Minister's sari. Would you want to throw some light on it? Well, she's on mute.
Okay, so as we count down to 9 a.m. and when we start our budget coverage, also viewers to tell you that we will be doing a collab show with our sister network, the India Today TV channel, and on that we are going to count down both to the market opening and live on what happens as far as the markets are concerned, and of course the beginning of a new relationship with the National Stock Exchange on that show as our prime sponsor for the show, as we try and expand the reach and understanding of India's stock market to many more viewers than those who just tune into business platforms. The focus really, Shell, Sakshi, and to all our guests who are here with us, to try and expand the markets, because as we have seen with the expansion in mutual funds, the kind of investing culture, saving culture that has come up will be a focus. One quick point that I want to just bring out for our viewers. We recently spoke to the State Bank of India chairman, C.S. Sethi, and he made that point that there should be a level playing field across all financial savings instruments, and this is something that he told us at Davos, and that point being reiterated. Will there be something in the budget that directly or indirectly helps move towards better deposit mobilization for the banking sector? Will be critical, because remember, bank finance shoulders most of the burden of growth, including the infrastructure sector, and there are so many sectors in India, and by some estimates around 100 lakh crore is required over the next 5 years. And where is that money going to come from? Will the budget be able to address that? We'll have to also wait and watch for that.
Well, ladies and gentlemen, we are just about 10 minutes away from pre-open. We'll pay a little attention to the markets, actually. Yeah. A painful opening awaits us, mainly on account of the pain that we witnessed on Friday as far as metal stocks are concerned. And what we'll do, ladies and gentlemen, we'll come back very, very quickly, but here's a short commercial break, and on the other side is the best coverage for the budget that you can ever see. Stay tuned.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Visit!
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Quickly on the reform, one policy narrative I definitely want Finance Minister to touch upon is India relative underrepresentation in the global AI landscape. So articulate a very strong AI narrative, step up funding for digital infrastructure, focus on data centers, semis, electronics, R&D. Our R&D spend has not moved a needle in the last 1 decade. So definitely a narrative on new age technology sectors, I think will be very good from an investor point of view.
I would be watching actually the signals on fiscal, and I think a clear and very clear signal on fiscal prudence is needed, because bond markets are on tenterhooks because of supply concerns. So I think the message that even as we are moving to a debt targeting regime on the center side, the fiscal deficit will be lowered in the coming years, and that it's not just going to be a center-driven consolidation, but state on the debt side will also consolidate. I think if we do send those clear signals, then at least the fiscal-related concerns that are a big overhang on the bond markets, some of that can be taken off the table.
It would have been easy to say after the lack of a deal with the US, let's turn inward. We haven't. In fact, that's motivated us to go on a spree of signing free trade agreements, right? And the EU was the latest. Now, what is the reform that's needed to complement that? In my mind, the old adage in economics, an import tariff is the same as an export tax, has never been truer than in a world of global value chains. So what I'd like to see in the budget is a start of a dramatic simplification and rationalization of the customs duty scheme. So we want to lower tariffs, we want to simplify the whole process, we want to correct inverted duty curves, and thereby make it much easier to import to help to re-export. So I think given the focus on FTAs and export-led growth, we need to clean up the customs duties and import regime so as to seamlessly integrate better into global value chains. So I'd be looking for a whole big package on customs duties, lower import tariffs, lower non-tariff barriers, including QCAOs. We focused on income taxes in the past. We've done corporate taxes. We now need to do import duties.
The budget, I think, will be, focusing more on the growth aspect. We've already seen, and the announcement that instead of a fiscal deficit percentage targeting, we are going to start targeting debt to GDP, which is at 56% currently. The glide path to 50% is being made. So clearly, the change in stance of the RBI and the government over the last 9 to 12 months has been to stimulate more growth amongst the global uncertainty, because we've had huge shocks in terms of President Trump's erratic tariffs. We've also had shocks in terms of the geopolitical issues. So the focus will be more on growth, I would say. The important thing to observe is to figure out whether the thrust on capital expenditure continues like it has been in the past 5 years, where the private sector slack has been taken by the government, and that's been a huge support to the economy. Last year, of course, we saw consumption boost also by cutting income taxes and GST cuts. So the government is, I think, firing on all cylinders along with the RBI to stimulate growth. But this year, again, we need to see continuity of capex. So that's one of the key data points I'm looking at.
In the budget, everybody is giving their wish list of what they want in terms of either concession or investments in their area of business. But the point is that if you look at the numbers, the government doesn't have much room to do anything, because what has happened is that the tax collections are running way below expectations. So tax collection numbers are available from April 1 to January 11. And first, let me tell you what was budgeted. So, when the budget was made, the nominal GDP growth was supposed to be 10.5%. So, accordingly, the GST and corporate tax collections were estimated to grow at 10.5 and 10.9, something like that, to both of them. Surprisingly, and this is something I had pointed out last budget itself, even though the personal income tax rates were cut, the budget showed that the personal income tax was estimated to grow at 14.5%. So I said, how you are expecting the personal income tax to grow much more than what you're budgeting for the other taxes? The only explanation can be that you're budgeting huge collections from capital market related taxes. STT was supposed to grow at 40%. So now, personal income tax has actually grown at 1%. STT has barely grown. Even GST and corporate tax, there are big shortfalls. Now, of course, what was kind of controllable, they have given far less refunds this year. Even then, as against a budgeted tax of 11% growth overall for all taxes put together, we are not even at 8%. So there's a big shortfall. And the reason, of course, is that nominal GDP growth has been very, very low. So आपको जो headline नजर आती है वो होती है real GDP growth, but what is actually, whether it is corporate tax, corporate profits, and whether it's taxes, they all depend on nominal GDP, which is the actual rupee GDP. And there the growth has been very low. So, it's been barely more than real GDP.
I think there are two aspects here, Sakshi. I think the government is walking a very tightrope when it comes to finances. So I think if you look at the fiscal deficit for this current fiscal year, it's probably going to end up around 4.4%. I don't think she will project more than 4.2% for next year. The reason for that is that indirect taxes have seen a dip in collections post the GST cuts. Income tax and corporate tax is all right, but I think we're probably looking at tax collections for FY27 to be, say, about between 9 and 10%. GDP growth to be somewhere around 6.8 to 7%, add about 3.5% inflation to that. So you're looking at something like about a 10.5% nominal GDP growth. So I think when you're in this growth environment where your tax collections are a bit constrained, I think the government will have to watch the expenditure side very closely. I think you'll probably look at a situation where capex growth will probably be around 9-10%, is my sense, at best about 10.5%, in line with nominal GDP growth. Within that, I think if you look at the two major sort of legs, which is roads and railways, I think the spending there also could be in that range of about, say, 9 to 10, 11%. But I think the focus, and I think we got a hint of that in the recent FTA announcements as well by the European Union and India. I think if you look at the defense spending this year, which has gone up, I think, 45, 50, 55% maybe.
Just back from the icy climes of that. Yes. We're in the sort of relative warmth of the studio, but the news treadmill never ends. You're looking forward to this budget. What number budget is it of yours consecutively?
Okay, that would reveal my age. I'll leave that. But I think the other big part of this record budget, you spoke about Nirmala Sitharaman's and her ninth turnout with this speech, is also that there is likely to be, as per government sources and this story that we broke yesterday evening, a fundamental change in the manner in which, and according to sources, this will be the first time in 75 years of budget making in India that there would be a change, particularly in Part B. And those of our viewers who follow this very closely know that Part B of that budget speech was the real action. It was where the finance bill and all the changes on taxation and tariffs used to happen. What will this change be? Indications are that it's going to be a longer-term vision statement tying in with Viksit Bharat. And remember, Rajdeep, this government has made several changes to the nature and manner of the budget presentation exercise. The date changed and that was brought forward. In terms of the focus, we have seen massive announcements happening outside the budget, the government showing flexibility to respond to emerging economic changes. So that, I think, at the macro level will be the big thing to look out for. And one quick element, deregulation. And this was again something that we picked up at Davos. But the markets have now currently in pre-open, and let me at this stage introduce our colleagues on the show. Shailendra Bhatnagar, Chief Markets Editor of Business Today Television, joins us here with us. Abha Bakaya, our Senior Anchor for Markets, a Consulting Editor, is here with us. Sakshi Batra tracks the markets very, very closely for Business Today Television. You see her every day on India Today and Abha. And we also have a very special announcement to make, Rajdeep. From today, the National Stock Exchange becomes the prime sponsor of the market opening and the market closing show that is shown 5 days a week here on India Today. So also some new firsts for us as well. But let me quickly go across to Abha to set the tone for the markets. The markets have, in the run-up to this budget, been a little weak, but 12 out of 15 times data shows that the markets show a bounce back. Abha, take it from here.
Good morning, Siddharth. Good morning, Rajdeep. And yes, given the state of the markets that we've seen, I think ever since the last few months, we saw a brief respite during festive season, and then there's really been completely lackluster trade and Trump's, complete, politics in the background. The budget so far, according to Market Master, seems to be kind of a subdued non-event unless we really see some major reform push. And that's where I'll come back to both of you in a minute, because what is the scope for the finance minister this time around to really give a fillip, whether it's on the consumption side, whether it's on the private capex side, in terms of some kind of incentive for corporate India to come to the table, or even if it's further government expenditure. But they do need to see some major push, not just something superficial, but something that will actually give a huge fillip to the economy. Remember, when we look at the kind of growth statistics that we're seeing here in India, we are on track, we're looking robust, particularly in the global environment. But in order to really capitalize on that and see all of those growth engines running, we are going to need to see some kind of incentive.
Finance Ministry officials, including Chief Economic Advisor, there is always a meeting of the Union Cabinet that provides formal approval, and that is Nirmala Sitharaman with a new age Bhai Khata iPad possibly behind that red velvet box with the Ashoka emblem on it, and a resplendent sari. I'm waiting to figure out which one this is. That's the entire Finance Ministry brass. There is another first, Secretary of Economic Affairs, Anuradha Thakur that you see on the left of Finance Minister Nirmala Sitharaman, a woman officer of exceptional ability and capability. So you have that touch also for the budget. We are also joined by our other guests, but I want to quickly go across to Shell. Shell, in specific terms for the markets, what is it that they are looking forward to? Because we have over the past several months seen both outflow of capital, perhaps on account of macro factors like the rupee, but also some taxation overhang as far as the market is concerned. Shell.
So, Siddharth, a three-letter word, tax, and another three-letter word, what do we do with FIIs? So there has to be something that comes in for sovereign wealth funds, that comes in for foreign institutional investors to stem this flow of very heavy selling that you see on the Lal Street. That is something that I'm looking forward to. Then fiscal consolidation, as also a higher capex, a lower borrowing, and of course, lots of external and internal reforms. Siddharth.
Okay, before I go across to Sakshi Badra, let's quickly cut across to our Business Today reporter, Karishma Sudani. Karishma, yesterday you broke that story about a fundamental change, and as sources put it to us, a unique change never seen before in 75 years with regard to the manner in which the budget will be presented, specifically Part B. Very quickly, what is it that we can expect as far as that change is concerned? Karishma Sudani. Okay, as we connect with Karishma, visuals there, Kartavya Bhavan, the new...
Karishma is joining us. By the way, just to say, you wanted to know what sari. Remember, Tamil Nadu goes to the polls in about 2 months from now, so it's a Kanjivaram sari. Nirmala Sitharaman comes from Tamil Nadu, Rajya Sabha MP from Karnataka. But the symbolism is there. Remember, Tamil Nadu is one of the states where the BJP has never really been able to make that major breakthrough, but they will hope that with the AIDMK, they can do that. And the symbolism is of her wearing a Kanjivaram sari. This is only since Siddharth wanted to know what specifically was the sari Nirmala Sitharaman would wear. Karishma Asudani joins us. Karishma, you want to take forward the question that Siddharth raised. What is going to be unique about the budget, particularly Part B of the budget this time?
Okay.
Okay. We'll wait and see if she can. Let me just introduce our other guest joining us. Rajiv Mantri joins us, author and investor. Welcome, Rajiv, to the show. Shankar Iyer joins us, veteran journalist, author, someone who's tracked the economy for what, 50 years now? You can reveal your age. Siddharth is worried about revealing his.
This is my 37th budget.
This is your 37th budget. That's pretty awesome. There is Dr. Sanjay Baru joins us. Dr. Baru also needs no introduction. He's authored several books. He's also been editor of several economic dailies, as well as, of course, been in the Prime Minister's office. What number budget is it of yours, Dr. Baru?
35th.
35th budget. Okay, 35th budget. Okay, 35th budget, 37th budget. Siddharth,
for the record, the 27th budget, since you will persist. But, okay, good. But Dr. Baru, do tell us, when the government says that Part B will change, it will be a unique presentation. Income tax changes already made. Indirect taxes now completely out into a federal council. The only scope left is tariffs and customs, and that has to align with the broader trade realignment. What would you have to say? And you can also see the finance minister right up there with the rest of her officials. Dr. Baru.
Well, I don't know what they mean by changing Part B, but you're absolutely right. This time it's going to be all about tariffs because that is where significant changes are expected. What we are not seeing in the last few years was the final statement of, what are your revenues, what is your expenditure. The combined statement was not being given in the budget speech. That was left for us to read in the other documents. Now, that used to be a standard practice in the past. So I don't know if she's going to revive that, because at the end of the speech, we need to know what is the total the government has collected, how is it going to spend. Those numbers were out of the budget speech. Budget speech became essentially a political speech with Nirmala Sitharaman. So I don't know if she's going back to a standard budget speech, which is more about numbers than about, policy statements.
Well, we just need to wait now. Pretty much till 11 a.m. to get those details. Two other guests who join us, Akshay Bhagwat, the Senior Vice President of Derivatives Research at JM Financial, and Manish Sonthalia, Director and CIO at MK Investment Managers. Very quickly to you first, Manish, what is it that would move the needle as far as market sentiment is concerned today with any budget announcement?
You're on mute. You're on mute.
Manish, you are on mute.
The only statement which the markets would be watching out for carefully would be the taxation part. LTCG, STCG, STT. You got to lower some of these. I mean, these are the only things which are worrying the market. Apart from that, the fiscal deficit number at 4.2%, your nominal GDP growth assumption of 10.5% translating into revenue collection, and incentives for exports because tariffs are hitting us, and plus your capex number. Of course, fiscal 26 will be left with some sort of revenue shortfall as things stand today. So, FY26 capex numbers are going to be whittled down in all probability, and in that backdrop, we should be looking at slightly elevated capex numbers for FY27, around 12.5 lakh crores ballpark. Plus the borrowings number, gross borrowings number at around 16.5 lakh crores. If these things do come about, markets are going to fly.
Sakshi, take it ahead with Akshay for us.
All right, Akshay, just about 3 minutes to go before the markets open for us. The indicative action is that 13 points higher on the Nifty is what we could start at 25,333. Although it's gold and silver that's crashed right at the open. 17,000 rupees down for silver, 9,000 rupees down for gold. So the over the weekend kind of a crash that we see is now getting even graver. How are you looking at the markets? What will you watch out for? What will your pre-positioning be before the market, before the speech happens? How will you trade the markets?
Good morning to all. Good morning, Sakshi. And it feels so good to see so many cheering faces on a Sunday morning. Well, for the Nifty, the data positioning continues to be weak as far as the FIs are concerned. A lot of short positions continue in the FNO segment. Technical placement is more or less neutral. I would suggest go for a level-based approach where 25,500 based spot Nifty would be an important level to watch out for. There might be some bit of an uptick in the initial first hour before the budget announcement. 25,400, 25,500 may be tested, but we need to be a bit more careful. Only if market sustains about 25,500, I would recommend to go for a buy position. Otherwise, it's more of a muted approach the market might give to the budget today.
Let's focus on some prices that have already come in. The Nifty Metals Index, ladies and gentlemen, is going to open 3 percentage points lower. A 6% down circuit on silver, on MCX, ditto for gold, and therefore all equity derivatives linked with them, Hindustan Copper, Hindustan Zinc, Vedant, National Aluminium, all of them slipping dramatically in trade. Broadly, the first 1 hour will be quiet, and then beyond 11 a.m. when the part B starts, ladies and gentlemen, the action will pick up.
So apart from, of course, the big picture, let's take a look at specific stocks that are going to be in focus. First of all, let's remind everyone, this is the first time, I think, that the budget's on a Sunday, or at least the first time in as long as I can remember. Yes, it is. Say our experts who have been doing this for close to 40 years. So this is highly unusual. Markets have also opened, of course, to track all the action. Keep an eye also on pockets like defense. Keep an eye on rail. Keep an eye on anything that is PSU related, where we could see the government announce some kind of fillip or some kind of spending budgets or allocations. This is really what the market's watching out for. Any boost to manufacturing would be a huge positive. That's a bigger step that we're watching out for. Industry status for certain pockets. Of course, anything on exports and tariffs. So the hotel industry is going to be watching out. Pockets like jewelry, textiles, all of these, smaller pockets of stocks will be keeping a very, very close eye on the budget. So from a market perspective, it's not just the big picture. It's also for the broader markets and really where we could see some of that action. And key to track will be defense, will be rail. These are the pockets that have actually been moving ahead of the budget. So maybe not on the index, but in terms of a build-up, we've definitely been seeing it across some of these key pockets. All right, opening bell on your screens. Actually, what are we picking up on opening bell?
25,312. I mean, we quickly slipped into the red, Abha, as far as the Nifty is concerned, just toggling at the flat line at this point in time. Let's also pull up the Nifty Bank there to see if there is any action on the banking space. Again, flat with a negative bias. So there is nervousness right ahead of the budget speech today, viewers. That's how you're looking at. But private banks, about 0.2% higher, giving us some hope that there could be something for the financial sector, something but PSU banks are down by 1.3%. There was a big expectation that something on the mergers consolidation front could be announced there. Broader markets taking a hit, 0.7% down for the mid-cap 100 index. Look at the small caps, even further down, 1.1% lower. So the larger mood, the broader market sell-off is pointing out to some nervousness. India VIX, the volatility index that tracks the greed and the fear in the markets, that's up by 3.9%, clearly indicating to a lot of nervousness on the D Street. Metals index, looking at and mirroring the gold and silver fall. It's again 4% down. What Shell was pointing out, on Friday, we had a massive 5% fall there. And the stocks that have been tracking, copper, silver, all of those stocks are down in double digits, about 15.5% lower for Hind Copper. Look at also Hind Zinc at this point in time, a 10% lower circuit for Hindustan Zinc at 565. So all those gains that we've got in the last 1 month, many of them are going away. Hindalco down by 5%. Shell, what else are you watching out for?
Well, Sakshi, the top 5 losers are either metal stocks or related metal spaces, including MCX, 10% lower at 2275. This is, of course, the global sell-off that we are seeing. Let me just point out some positivity. We've hit upon 5 top losers. Let's look at the gainers as well. Well, the complete defensive market comes into 4. Look at Sun Pharma, 3.5% higher. And Siddharth, a very good beginning for the NSE partnership. IFCI, which is a major holder of NSE stock, is up 10%. It's the top gainer. You have Escorts in the green, 2.5% higher. The Nifty Auto Index doing pretty well because we are looking for the auto numbers to come in. And of course, the likes of Zentech ahead of the defense budget, 2% higher. Insurance stocks are doing well. That's what at least I am looking at.
So I want to come to you, Siddharth, on something because, given a slight nervousness in the markets, but largely the budget has been priced in. So unless and until there's some kind of fillip to growth, there's no real particular downside as far as, Nirmala really disappoints. I mean, if she absolutely does nothing, not even any kind of surface level consumer-led incentives or something, that's really when we'll see the markets nosedive. But otherwise, I see a limited downside. What do you think?
About 3 factors to remember. Yeah. One, the Goldilocks movement that the Indian economy is going through, and our guests here would comment on that, but since we are focusing on the markets for the next few minutes, let me try and respond to that question that you made. Is there scope, necessity for tinkering around with further as far as our indirect tax architecture is concerned? Of course there is, but where will that happen? Outside of the budget. Is there necessity to look at further direct tax changes? Well, there could always be at the margins changing this, changing that. But remember, we are now in an environment where the government of India, the finance ministry, wants everyone to move to the new tax regime. No exemptions, lower thresholds of taxes to pay. And therefore, that is a policy direction that will continue. Therefore, what is left? It is customs tariffs. Now, customs tariffs used to take a lot of time in the budget speech. Dr. Baru would recall that it sometimes used to be 20, 30 minutes plus, including the days of Pranab Mukherjee as the finance minister. He brought that back when he came back to the finance ministry 2009 onwards. So effectively, the scope to tinker around with taxes and tariffs is limited to that extent. So what does it leave with? A statement of medium-term priorities, because remember, one of the criticisms of our budget-making process is you announce something on 1st February. By the time the first policy architecture is made, half of the next fiscal year is gone. And that is why implementation becomes an issue, and outcome budgets were supposed to fix that for us. So I would say, don't surprise anyone negatively. Continue down the path of fiscal consolidation and solid, factual, credible numbers.
Go ahead, please. Let me just mark the markets. Nifty Metals Index, Sakshi, is now down 4.5%. This comes after Friday's loss of 5.2%. In the red are the PSU banking index, 1.35% lower. Remember, ladies and gentlemen, this is very heavy profit booking, nothing much to be worried about. We had seen a very sharp rally in the metal prices as also in PSU bank. So money is moving from the book into the bank. Small cap index is down 1.2%. And it's a very light start to the market, Siddharth. 1,057 shares in the green, 1,200 in the red. The market is light. It could pivot if there is something interesting on the tax side.
Well, we have seen pivots in the past that used to happen when Part B would start. But Chetan Bhutani, who tracks infrastructure for us, standing by at Vijay Chowk. Chetan, very quickly, give us a sense of what the continuing focus for capital expenditure will be. Will it be in-line trend with what we have seen over the past few years, especially post-COVID, or should we expect a major change?
So that we would be seeing a normal minimal hike that has been continuing for the past 3 to 4 years. Nirmala Sitharaman knows that the infrastructure ministries are very capable of spending their money, and they have been spending quite regularly, and so they don't have much of the budget revenue left. So now we will expect normal 3 to 4% allocation for both roads and railways coming up. Not much highway spending would be done because the ministry is itself managing its own expenses, raising money from the markets, getting its highways listed and monetized. So these strategies have worked, and in case the ministry will not be taking too much money from the budget, but a significant 3 to 5% allocation for highways, 3 to 5% for railways, and port, shipping, waterways, telecom sector would see the minimal hike going forward. Secondly, Siddharth, what we know is, of course, the MSME sector. The government would be focusing on MSMEs and agriculture, with the government probably giving a very big announcement for the agriculture sector and in the name of the PM Kusum scheme and its subsequent continuation.
Absolutely. Dr. Baru, very quickly, deregulation is something that is echoing across the world. We have had a deregulation task force. Some policy changes have already happened, and Rajdeep and I both heard Chandrababu Naidu Garu in Davos tell us that it should no longer be about ease of doing business, it should also be about speed of doing business. Is deregulation likely to be a focus, and what would its merit be if at all it were to be announced today?
Well, clearly it has to be. You know, you spoke about Goldilocks moment, and this has become a popular phrase. I've never understood what exactly it means, because what we have, if you see the overall economic situation, is a fairly good record on fiscal stabilization. But demand has not been picking up. Demand continues to constrain capacity utilization, which is below 80% across the manufacturing sector. Private capital, has not been forthcoming. There's been a stagnant share of private capital formation to GDP. So what we really need is to trigger the animal spirits. I mean, Nirmala Sitharaman herself asked a year ago of Indian business, why are you guys not investing? And I think the answer lies with the government.
That's absolutely right, sir. In fact, Sakshi, just come in on the defense theme, because defense is one of the themes, and this question that Dr. Baru raised, we have put it across to policymakers and to industry, and they say, listen, don't always expect investments to come in mature sectors. Look at new age sectors which are seeing investment. Explain this point of view from the defense pack on the screen. Sakshi Batra.
Today, defense sector is up by about 0.5%. So looking at it, there is a high expectation that there could be a higher allocation. Remember, this is the first budget after Operation Sindoor. So that's why this is going to be extremely important. We have been seeing a slew of announcements where the Defense Acquisition Council has been announcing massive orders over the last 6 months. This time around, again, there is an expectation. How much could that defense outlay increase by is the question. Will it be 10% all the way to 25% as well? That's the broad range that most of the experts are expecting. What it comes out to be finally is something that we will have to watch out for in the speech. But definitely, defense is going to be a talking point in the budget this time around. There will be a higher allocation in the budget, that the government will be doing. That's for sure. What is the percentage outlay? Plus, I think, Siddharth, the big question is, given the lower headroom that we have shortfall of tax collections here. How much fiscal room is there to really elevate the defense spending is the key question. Will there be a way where the finance minister will be able to raise the non-tax revenues and be able to spend big on defense? Looking at the geopolitical scenario is something that we need to watch out for. It's a complete changed world order, and we need to see how the government will be maneuvering.
Shankar, come in on this, because the point that the survey made about a disinvestment approach which says that the government will perhaps hold up to only 26% and therefore a second round of further divestitures. Now, there have been questions around individual companies. Let's not talk about that. But taking that point forward, how much of a scope do you think? You saw that macro chart in terms of percentage trend line shifting downwards as far as defense expenditure is concerned. But from your point of view, how much of scope is there for a post-Operation Sindoor moment to be captured as far as defense allocations are concerned?
See, the defense allocations, for them to translate into actual acquisitions and purchases takes time. So I expect that the announcement would be a kind of medium-term perspective, just like with the NATO guys, they are saying we will reach 3% of GDP and 5% of GDP. India will probably present, Nirmala Sitharaman's budget should sort of probably give you a roadmap for the next 5 years on how they will increase or ramp up spending in defense. Remember, you may not have a headroom this year, but you can always promise that there will be headroom in the next year and the year after that. And that should be the approach anyway for defense acquisitions, because the process is very long drawn.
Right.
And as far as the story, you mentioned the PSU disinvestment story. I think whoever came up with this idea of 26% sort of never looked back at it, at the government's own record. Since 2004, the 30 companies have been listed through various IPOs. These 30 companies are valued at around 19 lakh crores. Out of these 30 companies, 29 companies, government owns more than 89%. So let's get to 51 first, then we can be ambitious about 26.
Yeah.
Let's sell some stuff first,
Fair point. Fair point. There is so much scope.
This is a dead duck, actually.
Abha, you wanted to take it forward with our market guests. Viewers, we'll stay on the markets for another few minutes and then go back to broader policy making. Abha.
Absolutely. I think, just before I do that, Siddharth, I know he asked everyone else, but I want to ask Rajdeep how many years he's been actually observing the budget. Yes.
I can tell you a little story. In 1994, I was at NDTV when we were commissioned to do the post-budget reactions. So I recall standing, and this was Manmohan Singh's probably third or fourth budget in 1994. I recall standing in front of the BSE in Mumbai on Dalal Street, and the connection kept going off because the technology wasn't good enough. So we were doing it for Doordarshan, cracking large OB van, I think had been placed just outside BSE.
I remember those, yeah.
So that's my first memory. And it is a day since then that I dread, because as an economics graduate, it forces me to almost go back and start reading about things that I thought I had forgotten over the last 30-35 years. Yeah, but it's been a long time, and I think that was Manmohan Singh brought that entire early 90s brought excitement to the budget. You can, whichever way you look at it, after 1991, a certain excitement came in, and it's never really gone. With the Chidambaram budgets in a united front government, then you had Yashwant Sinha, Jaswant Singh. Every budget had something that became a major talking point. And I think that's been the big change that's taken place. Rajiv is probably the youngest here out of us all in terms of tracking budget. But as an investor, I can very quickly ask you, is there that excitement that exists today about a union budget? Or is there a sense, as Siddharth pointed out, they just want the markets just want the finance minister not to do anything that will harm the budget or harm the idea of the economy. No retrospective tax kind of bombshell suddenly being brought in. That's all that people really want.
Yeah. No, I think once you achieve the major tax reforms, the budget becomes a more mundane procedure and process, as it should. Obviously, the earlier era had a number of major policy changes that required to be implemented, and the budget became a platform to announce those.
And also, so much more happens outside the budget, and you've got the geopolitical risks that are taking place. I know friends of mine who are more interested to know what Donald Trump's going to do with Iran, which they fear is going to have far greater impact than what happens at home. He's made an announcement today that India has agreed to buy oil from Venezuela, not Iran. Now, he does these statements.
But Rajdeep, that's fair enough. 2 days back, Prime Minister spoke to Delcy Rodriguez, Venezuelan stopgap president or Maduro's stand-in president. So
Yeah,
but why should Donald Trump, my only problem is why should Donald Trump be making that announcement? We are a sovereign nation.
There is really no announcement. We've always been buying Venezuelan crude. It was the US and allies who sanctioned Venezuelan crude. We couldn't buy it and we had to switch. Now if it's available on the market, without sanctions, it's
my point is, why should Donald Trump be making whatever decisions are taking us? Anyway, the pictures coming in are part of the ritual of budget making, where the finance minister meets the Rashtrapati, presents a copy of the budget to her,
e-copy,
in copy, and then sort of moves on her way to Parliament. So this is all part of the act of budget making. Next to Mr. Murmu is the MOS Finance.
Yes.
And he's also now the UP BJP president. So Mr. Chaudhary wears various hats. So Draupadi Murmu and Nirmala Sitharaman, and probably, of course, you've got a woman president and a woman finance minister. That doesn't happen too often. Today I was recalling when they spoke of Nirmala Sitharaman's 9th consecutive budget. Nirmala Sitharaman first came on a TV studio on a show I did in 2008. And the only reason is I rang up the BJP person and said I want an English-speaking spokesperson. Because they were giving me only Hindi-speaking spokespersons on an English language show. And they said, oh no, we've got this new spokesperson, would you like her? I said, sure. To the credit of Nirmala Sitharaman, she came perfectly prepared, focused, came to the studio. Didn't even say that I want to do it from some external Zoom link. There was no Zoom also in those days. Came, and it's quite a meteoric rise when you think of it. She's been Minister of Defense and she's been Minister of Finance.
And Commerce. Let's not forget.
So
Commerce.
In 17
in
years,
2014, yes.
since I first met her, Nirmala Sitharaman यहाँ से वहाँ गई है, हम यहीं के यहीं रहे. That's the only difference.
Before we slip into a break, a quick look at the markets. Wrap it up for us, Sakshi, on what the markets are looking like right now.
Absolutely. So the markets are nervous. I mean, we are at 932 at this point in time. And what we are going to be probably asking the question is, after we've signed mother of all deals, is it going to be mother of all budgets that finance minister is going to present today? And that is something that the markets will be watching out for. Remember, the markets are down 4% down on the Nifty ahead of the budget all of January. And the Nifty is now only looking at any good news by way of taxation that can probably lift the sentiments on ground for investors at large. At this point in time, a nervous getting into, the budget speech at this point in time. Okay. Fingers crossed for all the sectors.
All right. At this point, let's thank our colleagues from Business Today, Shailendra Bhatnagar, Abha Bakaya, and Sakshi Batra. And viewers, this is also a beginning for us for the Business Today show, the markets show opening and closing here on India Today, brought to you by the National Stock Exchange. As we continue our coverage, I want to toss this one to you, Rajdeep. In terms of that term that you have dealt with, dream budgets, the scope for dream budgets again changing because the Indian economy has been opened up, license Raj has been dismantled to a very, very significant extent. Yet budget making continues to fascinate everyone, including us who do it for a living. What do you think is your most seminal memory of the budget days?
Look, I'm not going to go into the past. You'll make me feel even older. But I'll only say that these words used, big bang budget, dream budget, I think we should refrain from making, these catchwords. They make great headlines. You remember Chidambaram's budget in 97 was sort of billed as the dream budget. Then we've had budgets being built as big bang budgets. I think budget making should be prosaic. What should be there is a vision. I have absolutely no problem that budget making increasingly should be about the vision and the direction in which you're taking the government. The word you used is the buzzword at the moment, deregulation. Everyone you talk about to says this budget will be about deregulation. Now what does that mean? I know Shankar has been writing about it for years. And just one more point.
Yeah.
For years, we have not focused on state budgets. As the economic survey also pointed out, you've got about 19 states now with high revenue deficits. How much do we actually look at state budgets? State budgets actually at the end of the day affect far more.
No, Rajdeep, and that is why one of the other things, and that happens every 5 years, will be very significant this time, which is the report of the 16th Finance Commission headed by Arvind Panagaria. That will now decide what will be the share of states in the overall central kitty. And remember, from 2001, it's gone.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Visit! Visit! Visit!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Two things which, market wants. So one is, they want the direct thing. I want capital gains to be cut it for everybody. Now, because, foreigners have been selling so much, it is, cut it for the foreigners at least. Where, there's some actually logic to do it, because India is probably one of the few or maybe the only country where FPIs pay capital gains tax. Most other countries, FPIs do not pay capital gains tax. So at least for the FPI, there's a logic that we want to cut it for them. And I don't think they'll do it for the locals because, they just increase the capital gains tax. So, if they keep increasing and cutting every time, then it will be somebody will say you're not able to come with a stable taxation. So, one is what people would want direct. And maybe here what they could think of doing is if they can do on the FPI, they can remove the taxation. Though their view has been that we don't want differential taxation for the foreigner and Indian. And the other thing is what they do to provide a thrust on the economy and ultimately what comes down to earnings. So for me, the wish list would be you do capital expenditure so that the economy gets a thrust. Because ultimately, one reason why markets didn't do well whole of last year was the earnings never grew. So the last 6 quarters earnings have been in single digit. And ultimately, markets are slave of earnings. So if you have a single digit earnings growth, then market tends to reflect that.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Visit! Visit! Visit!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
On business today. It's budget morning. It's Sunday, first budget ever on a Sunday. We're deep in already tracking all the possible outcomes. With me, we've got Sakshi Batra, Shailendra Bhatnagar, the entire Business Today team with you this morning, counting down to the speech at 11 o'clock, keeping an eye on market action as well, which currently is looking pretty tepid ahead of the budget, waiting and watching to see if there's any kind of positive or negative surprise. We've got our market guests with us as well. Arun Kejriwal joining us this morning. Arun, good to have you with us. Let's kick off with your expectations from the Finance Minister this time around and the 13th budget under this current government.
So, good morning to all of you. I believe today at the end of the budget, the market would be cheering not for anything else, but for the fact that they have opened up what they feel is the best way to tackle tariff Trump. Okay. Now, he has been doing all sorts of things, good, bad, ugly, and less said about him, the better. But there is a challenge which has been thrown not only to India, but to the world. Not having got the Nobel Peace Prize, he probably wants to invent a new prize for the person who creates a war. And that is what he's up to. India was touted as a very good friend of the US, but now it appears that there is jealousy at the fact that we have moved up the top countries in terms of ranking and are now fighting for third spot. So you already had the EU-India trade deal. Prior to that, 2 months ago, you had GST 2.0. And now you have an opportunity where the government sets direction to become competitive globally and to counter what the Americans want. Three things is what I expect from this budget. One is clarity that India has to become not only make in India, but competitive, making in India and exporting to the world. The simplest way of doing this is extending PLI schemes for a number of products. Now, PLI has two major advantages. You create capacity, you manufacture goods, and you sell it. Only then does the manufacturer, the businessman, get some money. It's not a capital subsidy. The second thing that we need is to bring further stability to our capital markets. We need to get sovereign funds into India who have a minor complaint, if I could say, that they are being taxed at much heavier rates than what they do globally. So some sort of redressal of their complaint, and mind you, they are sovereign funds, not people who are doing punting in the market. The third thing is for our domestic markets who have become a force to reckon with as far as the FII unabated selling is concerned, is some rollback of the tinkering that was done to capital gains tax a year ago. That could happen. I believe these are broadly some of the things that one should expect. And if we do hear something like this coming in, you can be rest assured that the market would be cheering Nirmala Sitharamanji.
Right. Arun, good morning to you. I want to understand from you, this budget really comes at the backdrop of a lot of geopolitical tensions, the Trump tariffs as well, that have truly impacted our export-oriented sectors. What is essential for the finance minister to do at this point in time? To continue on its growth-focused budget schemes, or to protect the economy largely from these external shocks? Can both be done at the same time?
So you've asked a very valid question, Sakshi, but let's understand the EU deal has probably happened after about 18 years. Europeans have been hell-bent on selling two products to India, one automobiles and two their wine and liquor. Both have been included, and surprisingly, it's almost a week since the trade deal has been announced, and no one from these two sectors has literally complained or whined about what has been done. I do understand it's early days to read the fine print. It's for the first time that we have such a long program rolled out where reduction in tariffs would happen over 7 years. This is pragmatic thinking, and it gives time to the local manufacturers to stand up and compete. Something similar is expected in a larger range of industries where Indian industry can stand up on its own and become competitive globally. This is what I am critically looking for, and I expect the FM to deliver.
Right. A very good morning to you, Arunji. I'm sure the first thing that comes on the mind of every investor and trader is this very sharp sell-off that we are seeing now in silver, gold, other metals, and of course their equity derivatives on the Lal Street. Now, what are your views? Is this a shake-off that's happening of the speculative bubble that was being built, or is this the end of the road for metals?
So, sounding positive, not trying to hurt people. Metals, particularly precious metals, bullion, had become, let's join the party, isko kharid lo, bina kuch kiye paise ban jayenge. And when I'm talking of paisa, I'm talking of tons of money. So it was the talk at maybe a kitty party, maybe a casual meeting in the evening, morning walk, and what have you. What led to this sell-off is primarily what comics did in the US, where they raised margins sharply and shook off all those party poppers who had just come in, walked in, trying to make a quick buck. Bull liquidation of the highest order happened. I believe it's good for the commodities, precious metal, that this shake-off has happened. And with such a rise, a good sharp correction is always welcome. You will find a lot of people who had speculated beyond capacity, beyond means, getting off, panicking, liquidating, and probably in the next couple of days, things will normalize. Understand that this rally has been triggered by larger geopolitical implications, which include de-dollarization, the attempt and serious effort of global central banks increasing their holding of gold significantly, and some of them selling off this buying gold by selling off treasury bills of the United States. Now, this is something that has led to gold being where it is, and geopolitical tensions, war possibility in one place, somewhere else we had the president being picked up overnight, etc., has all led to this. So, comfortable with what has happened, it doesn't mean the rally in bullion is over.
Right. Arun, just we are getting the GST collection figures now for January 2026. It is at 1.93 lakh crore rupees, the GST collections. The big question ahead of the budget will be, we have been seeing a shortfall in tax collections, both direct and indirect, from the budgeted estimates that we had. Looking at this tax shortfall, how much room does the finance minister have to continue to spend big and do the heavy lifting that the government has been doing for last couple of years, with the private investments continuing to be subdued? How are you looking at it? And with the new GST collection figures, what is your sense there?
So, Sakshi, let's understand, in previous years, I'm talking about 10, 15, 20 years, the deficit kept on going up without any control, if I could use the word. Now you find there is a financial commitment and deficits are being contained in that. If the government is of the view that the time has come to support economy so that we continue the spend, do not cut down on spending, sacrificing some amount of financial discipline to take industry through very, very difficult times, I believe market will welcome that. It's not something to get overtly worried about, but it would be taken in its stride. Coming back to your important question which you raised, that capex from private sector is just not coming. It's a fact. Let me give you another dimension to this. Of the 100 odd main board IPOs which came last year, less than 10% of the IPOs had an object where capex was the reason for fundraise. It was primarily repayment of debt, working capital, and so on and so forth. Very clearly, even IPO bound companies were not looking at capex. So this capex cycle has to revive, and with the EU trade deal done and government post this budget inducing capex expenditure, I believe we should be back on track where the deficit in capex spending from private sector starts kicking in.
Arunji, in this fairly decent fall that we are seeing in metal stocks, be it National Aluminium, Vedant, Hindustan Zinc, Hind Copper, in particular Hindalco, is there anything at all that catches your fancy at these 10, 15, 20% lower prices, or are you waiting for much worse to happen?
So whether it happens today, tomorrow, or day after, this entire pack will bounce back. Understand what is happening in this sector. Aluminium and copper are two requirements for not only the electrical power transformer, electricity distribution business, but also for a number of capital goods that you talk of. On the other side, if you look at steel, which has also fallen very sharply, steel forms the basic for any manufacturing activity that you have. All of this rose in a pack and fell like a thud. So it is when the bottom of the pyramid entered this sector expecting sharp, instantaneous gains and profit, that this sector cracked. And I think it's shaken out a large number of people with hefty losses. Something like this is good for the health of the market, and sooner than later you will find the rebound kicking in, because there is a genuine demand which is coming up and backed by mining shortages which are natural in such circumstances where you have limited resources available for mining.
All right, let's also welcome Punita Kumar Sinha, who will be joining in just shortly in the studio in Noida, right here in Film City with us to decode for us what should be the massive expectations from the upcoming union budget of 2026. Remember, this time around, viewers, it's the markets that are penciling in a lot of expectations with regards to any kind of tinkering on the LTCG or STT that could finally revive the sentiments. Punita, if I can come to you, good morning to you. Tell me, you've been speaking to so many foreign institutional investors. They have been at bay when it comes to India and Indian markets. 40,000 odd crore rupees is what they've pulled out in January alone, on top of the 3 lakh crore rupees in cash markets that they had exited in 2025. What is it that the finance minister can do in this budget to bring the FII money sustainably back into India?
Well, you know, the reasons for why FIIs have pulled money out of India are not necessarily very short-term in nature. The main reasons are that India's valuations were high compared to other markets. That was the first reason. Second was that the general view that India wasn't doing enough on innovation, particularly on the AI front. So on that front, I mean, if there is some capex that the government can do or some signaling that the government can do that India is going to become more focused on AI, that might help foreign investors, really relook at India. The third thing is that, foreign investors also were very worried about the Indian IT services sector as related to, again, AI investments and whether there is going to be enough jobs for all the population that, the young people that India is generating, because IT services was a very big employer. So I think unemployment, skilling, all of those areas the finance minister could potentially add some budget allocations.
All right. Good morning to you, Punita, and a very warm welcome. You are the absolute right person to ask what Mr. Trump will be doing next. According to him, we are starting to buy Venezuela oil, as also declining to buy more Iranian oil. So what exactly is he thinking, and how does his overarching presence help or not help Nirmala Sitharaman?
I mean, well, I think it's a very tricky to predict President Trump's actions, or even Finance Minister Nirmala Sitharaman's budget, which is going to be coming up soon. One shouldn't be hazarding a guess on what is actually held in very closed door meetings. But I think one thing, that the trade deal between President Trump and India, especially after India signed the EU agreement, I think US could feel that India, isn't going to yield, and India is going to go on its own agreements with other countries, and so there could be a softening of stance that might happening by President Trump. I mean, I think that is one area that I think, and I hope that this year we could have a deal.
Punita, it's so good to see you in the studio. First of all, thanks for joining us today. We usually have Punita, on Zoom, troubling her at all kinds of unusual times, as she's usually in the US. Now, when it comes to FPIs, also any expectations on tax, even if it's wishful thinking, whether it's some kind of relief for FPIs, whether it's broadening the base a little to allow for more pools of capital to access Indian stocks, simplifying buyback taxation perhaps, anything that you feel could be plausible this year in the budget?
I mean, I don't know if that will be coming or not. I mean, if it comes, yes, it could provide a short-term trigger. But again, as I mentioned, the reason the FIIs have been pulling out of India are related not so much due to taxation, but due to other reasons. And so while this, if it happens, could provide obviously a sentiment boost, it isn't going to be altering the other reasons. I mean, one of the other things that I do also want to add is that, India is a good hedge against any kind of correction in AI. Related stocks, and we've seen what happened with Microsoft on Friday. The stock really collapsed, and I'm wondering if at all this kind of concern about the huge capex that is required for AI by the tech companies globally starts taking some of the sheen off those stocks, then I think again India would be a good hedge and could benefit, and that could bring FIIs back as well.
You yourself are a very big investor in India apart from other markets. Punita, what exactly is on your radar or on your buying list should the price come to your satisfaction?
Well, first of all, I think one should wait to hear what the budget outlines, because anything that you're thinking before the budget could change dramatically after the budget. But in general, I would say that we have to, if there is a trade deal that works out, then one should keep an eye on exporters. At some point this year, I would hope, I don't know when, that exporters should get a boost. I would also focus on domestic companies, capex related, because I think investment in the Indian consumption theme, whether it is real estate, whether it is domestic consumer companies, whether it is infrastructure, manufacturing, I think those are areas that would be a good place to invest for the long term.
Punita, I want to ask you about the falling rupee and the depreciation that we've seen here right ahead of the budget. Do you think the government will pay attention by way of budget by announcing anything that we could understand by way of what could be the trajectory going forward on the rupee, or will it be again next week when the RBI comes out with the policy, it will be left to the central bank to really tackle? So far, they have allowed the rupee to fall despite some little interventions that they've done. Will this be the first time when the government can do something to protect the rupee?
Well, I think that's more an RBI initiative to work on the rupee, but it is not just the rupee that is weakening. I mean, there are a lot of currencies that are weakened, including the US dollar. So we've seen that there has been a general debasement of currencies, and the money has gone into gold and precious metals, and some of that we saw reversing very dramatically on Friday, and so that itself, if that that reversal could help some of the currency strengthen. But main reason, of course, is that if we have a trade deal, we collect more foreign exchange, we can export more, and we can draw in a lot more FPIs. Those are the things that will really help the rupee.
Well, Sakshi and Abha and Punita as well, a bit of cheer. The Nifty was very briefly in the green, but slipped back again in the red. The Sensex, of course, is in the green, 44 points higher. The Nifty Auto Index, thanks to all the numbers that are coming in as far as monthly sales are concerned, is in the green, as also is the Nifty Energy Index. But apart from that, it's a pain as far as markets are concerned. The Nifty Metals Index, which in early trade was down about 4.5%, is down just 2.5% now, which essentially means that either shorts are being covered on those that were taken on Friday afternoon, or you have some quality buying coming into counters such as maybe Vedanta, maybe Hindustan Zinc, maybe Hindustan Copper. But pain as pain can there be in the metal space, Sakshi.
Absolutely. Punita, let me also come to you when it comes to the customs reforms. There's some heightened expectation there. What can really come in there, and why is it essential at this point in time for the government to keep focused? Do you think the inverted duty structure really needs correction at this point in time?
Well, the duty structure should probably move in line with the tariff agreements that we sign with various countries. So we can't just cut duties without having trade agreements with countries. I mean, at least on the bigger items. So I am not sure how you can do that in isolation.
So, Punita, if you had to pick 3 key reforms that you'd want to see this time in the budget, giving everyone an incentive to really look at India, perhaps with a little bit more emphasis, what would be the top 3?
I mean, I think government capex, because that is required. Our nominal GDP numbers are quite low, and we are seeing the slowdown in earnings growth. What used to be more than 20% is now for the average Indian company is now already down to 10 to 15, and so nominal GDP anything to boost the nominal GDP growth. I think some kind of more investments towards AI or signaling that this is an important area for Indian companies and the government to invest. I think that would be important. And then I think with respect to skilling, because again, one of the concerns is that we have a very young labor force and we don't have enough jobs, and particularly with the IT services sector not hiring as aggressively. How do you skill these young people so that they are productive and can contribute to the growth of the GDP?
Punita, one essential fact that we have to discuss with you is that how significant will also be the Finance Commission's report, as it will be also tabled alongside the budget this time around. Do you think changes in the Finance Commission can in any way create meaningful fiscal space for the government, given the shortfall in taxes and the other revenue sources at this point in time? Is there going to be any change, do you see, to the 41% devolution to states here?
I actually haven't focused so much on the Finance Commission, quite honestly, as to what and how that would impact the fiscal space. But in general, I think, our state revenue and finances have to be better managed.
Fair point. I think this is as good a time as any to look at stocks, how are they behaving in terms of top losers, apart from what's happening in the metal space. There's Karur Vyasa Bank. Remember, banks have also shown a bit of profit booking. This was at a record high on Thursday and Friday, 4.5% lower. Angel One is down. So is Radico Khaitan, BSC and EID Parry. I'm just giving you a broad brush. There's no volume in the market except for the metal counters. That's because we're waiting for the speech.
So 1 hour to go.
Absolutely.
1 hour to go, and then we'll see what happens. And how long do you think the speech will be this time?
I don't know, it can be longer in the part B, as we've been discussing, Abha, because that's a different aspect, probably a unique aspect, nothing that has been seen in the last 75 years. Part B usually is just about 15-20 minutes or so.
Exactly.
This time it's going to be longer, as we are told.
So 1 hour, 15 minutes.
That's last time she'd really concentrated it, hadn't she? She'd really managed to keep it tight.
Yes.
So let's see. Well, if it's good news, we don't mind how long it goes, right?
Absolutely.
And it's a Sunday.
And it's a Sunday, yes.
We have more guests, I think, joining in with us. So let's welcome, I think, Rumki Majumdar, economist, Deloitte, is with us at this point in time. Hi, Rumki, good morning to you. Tell me your biggest expectation. What do you think can be a make or break in budget of 2026?
Good morning. Nice talking to you all. And make or break. Well, what I believe is this budget is going to be all about reform and perform, because that's what the government has been kind of indicating towards. From last year onwards, they have been on bringing in series of reforms, be it GST or tax exemptions and the labor policy reforms. Now I think what they will focus is on the supply side reforms, ensure that there is more of ease of doing business in the economy and ease compliances, make sure the regulatory hurdles are kind of moved out. That's one. Second is, I think, MSMEs. I think that sector has suffered a lot. So a lot of support is required to the MSMEs, and I think there will be a lot of focus on how to make sure that MSMEs have access to credit, has access to skills, has access to technology. And I think third, I think it's my wish, is the fact that the government also can focus on R&D and innovation. How can they incentivize the private sector to jump into the R&D and innovation? Because now it's a game of play at higher margins, higher value add, be it manufacturing or services. And that's where I think there should be a focus on how they can focus on skilling, AI skills, AI investments, and R&D. So yeah, three wish lists that I have.
In terms of the kind of growth potential we're looking at here, given, as Punita also mentioned just now, nominal GDP still could be a little bit better. If we look at a sort of more concentrated push in terms of how we can maintain or alleviate the growth, accelerate the growth rate, would you narrow it down even further?
So accelerating growth, to be honest, see, the government has very few ammunitions left to boost the demand side. They have done all what they could have. Maybe a little bit here and there, but on the supply side, there's a lot can be done. Because see, if you look at a push, comes from the demand side as well as the supply side, and this is where I think the private investors can actually do a big push to the overall GDP growth. Private investment so far has been modest, and I think it's not because they do not have the appetite. If you look at the outward FDI investments, these companies are going out and investing. Right now, they need to come in and invest in India. And I think that's where the QR, that there's an appetite to spend, but it's just that they need the reason, because they see a lot of hurdles, a lot of startups, they themselves are who want to come up, they can be quickly doing business. So infrastructure side, again, the government has spent a lot on capex. So now they need to broad base, they ensure that the tier 2, tier 3 cities can also participate in this growth story of what India is seeing. If all these can be ticked, I think the growth will be much more self-sustaining, broad-based, and actually can ensure that we actually touch 7% in the long term over the next 25 years.
All right, let's take a look at some breaking news coming in on your screen as well. Let's just pull that up for you, all the latest as we count down to budget, and just about 45 odd minutes to go now before we hit the speech. And everyone's counting down to see what the finance minister presents this time. Now, Jan GST numbers have come in. Remember, we're at the first of the month and it's a Sunday, so we get to report all of these numbers for you live. GST up 6.2% on year. We've got strong GST mop-up numbers coming in January, so everyone concerned about some amount of tax shortfall, I think these indicators are showing otherwise. Strong indirect tax collections as well. We are seeing at this point of time. So Jan collections are good, indirect tax collections are good, GST is at 1.93 lakh crores for January alone. So it's looking good altogether. In fact, if we just take a look at the build-up of data ahead of the budget as well, GST is up 6.2% firstly on year in Japan, as I mentioned, but we have had strong growth numbers coming in from the GDP numbers. GST mop-up numbers are also looking good and strong. All of this, Siddharth, is just building a case for the government to spend more. We know that there may be restraint fiscally, but the data is all stacking up and looking really positive.
On certain budget heads, we've seen in the past that even if there is allocation, spending does not keep pace. At this stage, let me quickly go across to Yazdi Nagpurwala, the CEO of KPMG in India. Yazdi, welcome to the show. As Abha was taking us through some of the latest data, it's very clear that attention needs to also be focused on how our states are performing, but let's leave that for some other time. What do you think is the most important item that this budget, Nirmala's 9th, has to deliver on today?
To my mind, one of the most important aspects is to protect growth. We have seen in the last 1 year a huge amount of uncertainty. We've seen a trade imbalance, if you like, and one of the key things that we need to now do is protect our growth, our numbers, whether it's 7.4%, as well as parallelly. Whatever we spend, we need to spend it smartly. Whether it's capex, consumer, we'll see how that pans out. And the third aspect I would bring out is the element of policy certainty. Now is a good time to consolidate. It's a good time to bring in simplicity in our reforms.
Okay, let's also go across to Karishma very quickly. She's, of course, live on ground, keeping an eye on all the action as we count down to the budget speech. Karishma, over to you.
All right, as we get Karishma mic'd up, Yazdi, staying on that topic further, in terms of the scope for tax-related realignments, there is, smaller things like TCS. What would you say we can expect as far as tax is concerned? Because some of the big heavy hitting happened last year, and GST, as we all know, is outside of the purview of a budget announcement.
A lot of the positives come from away from tax as well. There can be a simplification of the TCS. There is, of course, a focus on increasing the pool, deepening the pool, and things like that. We've seen it over the years, how things have improved. But to my mind, it's more than cutting rates and things like that. It's more about predictability. It's more about dispute resolution, whether it's faster refunds or lower compliance friction. And these are the aspects. We have a lovely opportunity this year to move the needle on those fronts.
Yes, as far as customs is concerned, that remains completely within budget ambit. And there are two things that one has picked up in the run-up to this budget. One, some sort of amnesty scheme, maybe a customs version of Vivad Se Vishwas Tak. And also a broader realignment of tariffs given our recent trade engagement and the fact that we are getting into deals which in any case require us to promise a lowering of headline tariffs. What do you think can be expected on the customs front?
Yeah, on the customs, I would say we have an opportunity of lowering some elements, which in turn will improve our productivity, which in turn will improve our competitiveness on the exports. So if we have an opportunity to lower some elements of customs, but with a corresponding visibility of how that improves our competitiveness in the exports, I would think that will be welcomed by the industry.
Okay, one more point, and I'll then go across to Punita. We've been trying to fix some audio issues here in the studio. In terms of the indication by the government that the nature of the budget, Part B, which was the finance bill, will change and this will be unique 75 years. You want to hazard any guesses that what could this imply, and if a medium term, long term growth statement is Part B, is the very structure of the statement of accounts being changed?
I'm sorry. That's a very, very tricky one, and I wouldn't respond to that.
Okay, Karishma, tell us quickly. You've been reporting this story since yesterday. What is this Part B change likely to be? Are you any more wiser now that we have perhaps 40 minutes left for the budget speech to begin, Karishma?
So that the Part B, I wouldn't call it a change. I would rather call it an increased emphasis on the fact that Finance Minister Nirmala Sitharaman, in her 9th budget that is going to just commence in next few minutes, will focus mainly on the taxation part of it. Now, I was sharing this early in the morning with Sakshi also, that yesterday evening I went through her past few budget speeches, and I also tried to time them. Between say 108 minutes to roughly 75 to 80 minutes on an average. If I pick up 80-minute speech, right, she focused 35 minutes mainly on the Part B, which is the direct and indirect tax reforms, and they've been pretty direct. Right. In terms of the announcements that she's made, be it the last major income tax cut that she had announced. Now, this year and this budget, why we call it a big bang Part B budget is because we are expecting that she's going to definitely go beyond 40 to 50 minutes on just emphasizing on Part B. And Part B, when we talk about Part B, we are talking about direct and indirect.
I am looking forward to, Karishma, what A plus B will equal to, but
I was just going to say.
Hang in there. Yasdi, I am coming to you, but if we can get Punita in on the frame as well. Punita, you are here with us. Do you have any insight that you could offer as to what, and we are completely speculating, viewers, what this rejigging of A and B could eventually be aimed at?
I have no idea. I think this is very cosmetic, quite honestly. It won't impact the growth.
So let's discuss business, because there's
Which
enough
will
that
excite the market more. That's the question.
There's enough that is discussed on the margins. Punita, in terms of policy focus and a sectoral focus, either from a boost to that sector or from an allocations perspective? What would you highlight?
No, I would think that the need of the hour is more manufacturing capex. And for that, certain incentives need to be announced. And that is important because once we have the trade deals, we will need to have more manufacturing capacity, and that would require more incentive, whether it is PLI schemes. And manufacturing is, of course, very broad-based, including, sectors like pharma and other energy, oil and gas. I think one of the other areas that could be highlighted this year is mining, because the whole world is talking about critical minerals, and India hasn't invested enough in our mineral resource sector. So there could be some incentives there. And I think agri as well would be an area. And then I think innovation, whether it's R&D, AI, or any other kind of innovation, that is going to be very important.
So from a market impact standpoint, Puneeta, and more immediately sectoral reactions or sectoral hopes at this point, outside of manufacturing, should we look at defense? Should we be looking at perhaps power, renewables, some of the other pockets where we could see the government sort of apply some kind of incentives? Where else would you be looking?
Now, for instance, like if you increase the AI spend, you need to commensurately add capacity on the computational needs from an energy perspective are quite high. So you will need to invest more in the energy sector as well, real estate, because data centers, etc., are needed. That could be another sector that could benefit. So yes, energy, power, minerals would all be required. And then, of course, you have to keep doing the capex, that your normal capex, to keep up with the nominal GDP growth. Right. You have to keep investing in infra.
Yes, the banking and financials, manufacturing and PLI, and I'm sort of putting, trying to summarize Puneeta and other points, tech and digital economy and energy and green transition. These are the four pillars that I am personally looking forward to. What do you think will be the sectoral focus out of this four-pillar approach that I just highlighted?
To me, our growth comes from capex, it comes from infra, and we have an additional dimension now of the digital infra as well. And that is a segue into energy aspects. So as Puneeta mentioned, once we go down data center, you need real estate, you need water, you need power, and those aspects have to be, without that you are not going to succeed with some of these initiatives. But parallelly, I'd also bring in defense, which is the need of the hour. We've seen in the last 1 year that nations are stronger with defense capabilities. So I think that will also feature in the scheme of things.
Let's take a look at defense stocks, because this has been discussed ad nauseum, the post-Sindoor effect and what it means for defense stocks, and whether there will be a higher allocation in the green, the Nifty Defense Index, but that could just be expectations. Now, some of the newer age work that is happening in the defense space involves a lot of high-tech, drones, software, and perhaps that value chain is not being captured by all the existing companies. So we will see, given the changes and the lessons that are being learnt in warfare, plus with that ongoing massive battle war in Ukraine. Rumki, I want to bring you in. The macro backdrop for this budget could not have been a better one for any finance minister. There is, of course, a big overhaul of all the big data that is going to happen separately and outside of the budget. But in terms of setting growth priorities, what are the numbers that you yourself are factoring in that are likely to be announced in the budget? Rumki, I think you are on mute. You need to unmute yourself. Yeah, go
My
ahead.
apologies.
Go ahead.
Hi, Siddharth. You're absolutely right. This is one of the budgets where pretty much all economic fundamentals are very good. If you look at the inflation, it's all-time low. As you see that the current account balance, it's one of the lowest in a decade. Fiscal deficit, the government has met its targets every year consistently since the pandemic. And if you look at the growth, first half of the fiscal year was 8%. Nobody even expected. So fantastic economic fundamentals. And that's where I think the government will take an advantage of being in a very sweet spot. People say Goldilocks moment, to ensure that we kind of keep the momentum going forward. And as you say, what are the economic parameters? I think where it will need to look at is as FDIs. We have seen net FDIs being very low. It's less than 1 billion this year. Not because that the gross FDI has been very good, actually, is the repatriation, which means there's a lot of confidence, low confidence among investors in India to continue to repatriate. And that's leading to repatriation. And that's what the government will try to address. Second is the currency depreciation. We have seen currency depreciate really fast, and that's where I think the government will try to focus on ensuring, giving more confidence to the investors that yes, India is a destination to invest going forward. And that's why all the FTAs that we are signing in basically will help ensure that a lot of investments come in. So these are some of the parameters that the government will try to address by the reforms, by the performances or executions that they announce during this budget.
Okay, Yazdi, I'm coming to you again before we let you go. We believe you have to leave. What do you think are the possible incentives that could significantly influence FDI coming into India? Because we've seen how both portfolio investors have behaved and how FDI has behaved. There have been very massive announcements, but overall, what could lead to a trend shift?
So one is, as Rumki mentioned, some of the macro aspects. The currency itself today is encouraging for FDI investments. Our inflation is low, so the macro piece is in place, I'd say. But what do investors look for? They look for consistency, they look for stability, and they look for returns. So if we can offer that, and this is not something you can offer in one budget, it has to be, it's a journey, so to speak. And we are already, I'd say, halfway down that journey. And if we continue further down, making it easier for investment to come in, but at the same time have a climate that gives returns to those investments, that itself would be a good switch.
That's a good point. Punita, a return on investment, and that factor has played out with what has happened to the rupee. You could be on two sides of the argument. The fact that over the last 6 months or more, we have had to respond to what of Trump's tariffs on India, and therefore we have let the rupee behave in a certain manner. On the other side, our forex reserves are very, very substantial, $700 plus billion at a last count that I can recall. Not related to the budget, but in terms of currency management, what do you think is the priority to at some point also now think about the cost of imports going up?
Yeah, so first on currency, I think one of the big concerns investors have, and I'm not just talking institutional investors, I'm also talking NRIs, right? Who would like to invest in India, who would be, would like to be part of the growth story. They say that, whenever we brought money into India to invest, we've lost so much on the currency, and that, even though the returns have been good, US has still been the best performing market. And after adjusting for currency, they don't see much incentive, particularly all the NRIs in the US, to come in to India. And I think the same holds for a lot of other NRIs. So in the institutional investors, obviously, if you're running a fund, your investors would like you to deliver at least 15 12 to 15% annualized, and if you lose 4, 5, 6% in currency, then the fund manager has a much more difficult job of delivering the returns. So what do? They invest in countries which also have currency stability, and India has not offered that. Should the RBI be intervening, given the large amount of FX reserves that we have? And that's something that the government, finance ministry and RBI need to discuss. But of course, a weaker rupee should help exports, but then we don't have all the trade deals that we need to have boost our exports. So I think they need to go hand in hand.
Clearly, Abha, this is a peculiar moment as far as currency is concerned, and policymakers have been at pains to point out in the past that when all of us talk about the rupee depreciation and perhaps feed into this debate, and the political opposition has spoken about it, that the rupee is becoming weaker and they link it to national pride. The fact is, you have to look at what is happening as far as dollar is concerned, as far as what the US economy is going through. Rumki, I wanted you to come in on this. Is rupee depreciation at a point where a macroeconomic discussion needs to happen between the trade-off of supporting exports and the negatives of costlier imports, particularly as manufacturing inputs?
I think it is. It is time, because to some extent the currency depreciation helped, because it kind of helped us offset some of the tariffs that were imposed on our exports. But now, if it depreciates further, we will also scare off many of our investors who were investing, because the returns on those investments that the foreigners are making in dollar terms, it's basically ways off. Second is, we have signed so many FTAs. So if we are importing cheap, but then if the currency is depreciating, then the consumers do not get the benefit of that, right? So clearly now is the time where the RBI should step in to ensure that the currency is more stable, and also it helps in also making these deals, forward contracts, etc., because then they know what rates they should be hedging themselves. Otherwise, a lot of resources and energy goes into hedging activities, and hence I think the policymakers should now intervene, ensure that there is a lot more stability. But there's also one fact that I would want to bring in. In India, currency always depreciates in step. So it depreciates very fast and remains stable for for some time. And this is something which we have seen since 2022. Depreciated, stable, depreciated, stable. So hopefully we have come to a point where it has depreciated enough and it will remain stable for the next 1 year. We'll see how the government kind of steps in and at what rate it stabilizes it.
Rumki is on the side of saying that enough of depreciation and perhaps the RBI needs to step in. We really don't know. The RBI, for the record, has always said that they are concerned with orderly depreciation and orderly management of the currency account. They don't defend a level, and past experience has shown us that the quantum of forex reserves may never be the guide to taking us call on defending a currency, but Abha, take it forward from there.
All right, I think we'll let go. Yesdi, thanks so much for joining us this morning and taking us through a whole variety of views. We've also got Sunil Singhania joining, and I can see him on the screen there as well. So great to have you with us, Sunil. Let's dive into markets. We're about half an hour to go.
Yes.
And right now it's looking pretty flat. Wait and watch more. We've been talking to Punita on the FI kind of view and what perhaps can be expected. We've been discussing economics and GDP data with Rumki. What's on your radar this morning, Sunil, when it comes to the budget speech and what you're anticipating?
I think we have had a very volatile last 1 month in the equity markets, and last 2 days on the precious metals and metal front. Good thing is that the budget has not been on anyone's mind, and to that extent, I don't think there is any major expectations. But at the same time, I'm very sure that the government is also cognizant of the fact that India needs flows. Both on the equity and fixed income side. India needs equity investment if we have to, focus on self-reliance, which is now going to be the order of the day with this tariff issue lingering for so long. And if we have to make ourselves autonomous and independent, we need to have very, very consistent flows on the equity side also. So I think if that kind of thought process is there, we are very sure that at the margin, there might be a few small announcements which might be favoring the equity markets and also the fixed income markets.
Okay, so we've been tracking a lot of the incoming data, Sunil, apart from what's happening on the metals pack and of course the tariffs have some very, very big pockets there. But on incoming data, whether it's auto sales, Jan GST numbers, the recent GDP or data or what we saw on in terms of growth indicators, everything seems to be moving along and seems to be fairly positive. How much room do you see the government having this time around to really attack what is the key area that's expected, which is capex outlay?
I think there will definitely be some disappointment in terms of tax collection numbers. I think capital gains tax, particularly last year, we had a very buoyant, run into the budget in terms of capital gains collections, and therefore the Honorable Finance Minister increased the outlook on capital gains collection, which has not happened because no one has made any gains this year.
Right.
So yes, there is not too much of room, but I am very sure that we are a large economy, and government has a few aces up its sleeve. Hopefully, IDBI Bank should get done, and that is going to be a good $8-10 billion. Obviously, RBI continues to give a dividend, which should be good. On an annual basis, oil prices have been soft, which helps the government, though I think this time it has been more, been allowed to be kept by the oil companies, but doesn't matter, it will come by way of dividend. So I think it's a tight rope for the government between increasing the capital expenditure or the planned expenditure and maintaining fiscal prudence in terms of 4.2 or 4.3% as far as the number is concerned. But, I think that is one number which will be looked at very closely. You don't want a scenario where government borrowing program is very heavy. There's already a pressure on yield. Yields are almost at 6.7%, vis-a-vis 6.35, 6.4, which was the case last budget. And therefore, if the borrowing program becomes very heavy, we have the risk of the yield getting under pressure. Rupee has also been under pressure. So I think it is one of those years, maybe in the last 8-9 years, the Honorable Finance Minister has presented the budget. I think this is going to be one of the most trickiest budget, so to say, where a lot of things have to be managed.
I think Sunil's just echoing, some of what we were just discussing.
In fact, Sunil, just to follow up that point, in terms of any sectors or industries that could be impacted and meaningfully drive earnings on account of policy measures, higher support or higher spending that may be announced in the budget, Sunil?
So that, gone are the days where budget used to be game changers for a lot of sectors and industry. I think tax tweaking has become very, very low, and GST is frankly outside the scope of the budget. So we don't see anything there. But I would say that this whole focus on Atmanirbharta, particularly given what is happening in the world, will mean that sectors like textile, which have borne the brunt of tariff, or even some of the other sectors like self-reliance on energy, particularly renewable energy, maybe to some extent increasing infrastructure, whether it is air infrastructure or road infrastructure or even railways infrastructure. The whole world is moving towards self-reliance as far as defense capability is concerned. And I think some of these sectors are very obvious. I don't see them not being obvious. But some of the other new age sectors where India can make a mark, whether it is setting up of data centers, whether it is setting up of semicon facilities, which are long-term, very, very crucial, nuclear power, I think some of them might find ways in terms of mention. But whether they will lead to immediate change in earnings, I don't think so.
So he touched upon one really interesting point, which was the IDBI Bank divestment.
Yes.
Given that divestment has just been one of those areas where every year we expect something from the government and every year there's a disappointment or just lag of enough action on that front. Siddharth, do you think that this is going to be the year where we actually see, IDBI is set to conclude by February 5th, and that would be fairly substantive, as Sunil has just said, but could we expect more, and on how significant will this particular stake sale be for the government?
So, the economic survey speaks about this subject and harks back to this debate earlier, and Punya, maybe you can also step in on this, that how much of a shareholding should the government have? No one's really said that there should be wholesale exits by the government, particularly, for example, in the energy space. It's clear to us in the world that we live in that you need the petro complex and you need it to perhaps be in national hands.
Right.
It's very, very clear. Solar power, the fundamental push came in from the government, and then now there are very capable private sector companies taking it ahead. But at least come down to 51%, if not 26%. Pranita, you want to weigh in on this point, that how far can the government go, or ideally should go? You know, we have cases like Air India, but we equally have a case like Bharat Sanchar.
Interesting, you know, I did my PhD in privatization and IPOs.
Okay, we didn't know that.
That's amazing. Yeah.
So this was not a set question, viewers.
I think just divestment without change in management or change in, you know, the fundamental operating environment for the company doesn't do much for the company itself. All it is a change, is resource gathering or money gathering for the government. So I think one has to take a holistic view as to what are the strategic sectors that India needs to own at the national level versus what should be held at the private sector level. I mean, we are seeing, the reversal in the US. President Trump is trying to acquire stakes in private companies for strategic reasons. And, you know, so that's a bigger and longer conversation. But I think given that they need resources, they are doing divestment. I don't think they're doing divestment because they don't think these sectors are strategic necessarily. I mean, Air India could have been a strategic sector. Airlines could have been a strategic sector for the government, and they didn't need to divest, but they needed the money and they couldn't handle the losses. So I think if it is in the government hands, it has to be operated efficiently enough so that it doesn't lead to more losses and more fiscal strain.
Yeah. Sunil, can I just come in? You made that point earlier and I wanted to follow that up. Therefore, if an investor, and I'm sure they have questions while they're watching you, how should they be positioning their portfolio, particularly in light of some of the uncertainties, including the external factor?
I think very tough question, particularly given what has happened over the last 15 months. You know, so September 24, sort of we peaked out in terms of the Nifty, maybe, you know, the mid and small cap carried on for another month. But thereafter, we have seen, various headwinds, and obviously they've all got reflected into Indian equity markets being one of the worst performers globally. I think having said that, one good thing is that the growth in the economy continues despite all the headwinds. I think balance sheet generally is pretty okay. I would not say that it is looking the best, but with some luck and some maybe push from the government, the balance sheet is also pretty okay. Corporate profits so far which have come in have been pretty okay. I think we are trending towards that 9-10% profit growth. I think from here, how do we get to maybe, a nominal GDP growth of 11-12% and a profit growth of 14-15%? I think that is what will decide on what happens. So I think from a investor perspective, you have been brave and you have withstood what has happened over the last 1 year. I think this is a time just to be patient. Have a look. Don't get extraordinarily excited. At the same time, don't get too overawed by news flow, because we have seen so much volatility just stay across, and I think I'm very sure that we would do well.
Visuals again on your screen of the finance minister carrying that digital Bahi Khata or the digital budget book, beautifully bound in what seems to be red velvet. I haven't laid my hands on that, but again, I imagine these are visuals right from Parliament House, the new Parliament House, and you have various officials, including Mr. Nagaraju, the Financial Services Secretary, Chief Economic Advisor, Ananta Nageshwaran, Anuradha Thakur, the Secretary of Economic Affairs, Mr. Chaudhary, the Minister of State, Arunish Chawla is there. We have Mr. Worlingam, who is expenditure, and other officials, including the revenue secretary. Customary visuals that kind of bring in a sense of occasion, and the finance minister, resplendent in that Tamil Nadu Kanjivaram
I was just going to say.
Political, not a political choice. I'm just focusing on the fact that this is yet another glimpse of India's massive and high quality handicraft, handloom tradition. And it changes. Every 100 kilometers you can get a new masterpiece, Abha.
Absolutely. I have a few of those as well. but just looking at, I just feel like watching Nirmala Sitharaman sort of grow into this role over the last few years. It's been such a phenomenal journey. Just look at the ease, the grace, the confidence, and as you said, resplendent this morning, both with the Bhai glowing in red and the beautiful sari. And that image of her with President Murmu also just about an hour ago was extremely powerful to see both of these.
Absolutely,
both of these women
and
together.
who knows, well on her way to set a record, beat from Morarji Desai in terms of the number of budgets. He did 10. I'm pretty sure that she's on her way to surpass that by a long margin. I think we have to thank Mr. Singhania for being here with us, and as we also dial in other guests, I can see Ajay Srivastav, MD Dimensions Corporate Finance Services. Ajay, welcome to the show. 15 minutes or thereabouts exactly left for the budget. Give us a sense of how the markets first are seeing this. For us, it's a big event. For the markets, what is it like?
Unfortunately, Siddharth, market is driven towards a different part of the system, the commodities and metal at this point of time. So I think most people are focused there than the budget, because the gyrations there are making or killing your net worth in a magnitude which equity markets cannot do for years to come. So I think, unfortunately, the situation right now is everybody's eyes are glued on commodity screens and metal stocks and what's happening there. And
what's your silver position like, Ajay?
I have got silver position. I have got a silver position, and we've added today a little bit of more to it position at this point of time, because the correction is giving us opportunity. Again, we don't know what's going to happen tomorrow, because right now we are in the hands of regulators, whether it is the MCX margin or whether it is the US regulators, COMEX margins. So, at this point, sir, the fundamentals are not in play. What's in play is the temporary margins being put by various regulatory authorities to cool the system down. I think it's going to take about 10-15 days for us to understand fundamentally where the direction is. But by and large, one has to ride the storm calmly, carefully, and see where we take our portfolio allocations and not panic into it. Such panics often do good opportunities. So to my mind, metal has done the best in the last 1 year at this point of time, should be in the top 3 for the next year. And you can't build a portfolio without precious metal as well. So take it calm, don't get panicked, and you're an investor at the end of the day. If you're a big speculator, you got to put margins, you worry. But as an investor, calm down, give you opportunities. When you get opportunities on such days, use it. Maybe you'll get one more opportunity to buy. But don't panic. You need to have it in your portfolio, full stop.
All right. The Cabinet has approved Budget 2026. It's again ritual, part of protocol. That's coming in on your screen, and it's just another 10-15 minutes or so, we'll have the Finance Minister begin her speech as well. So we've had all the customs taken care of this morning, from meeting the President to the approval by Cabinet, and now, of course, heading towards the actual deliverance of the speech. Ajay, I'm going to grill you a little bit. I know you're focused on metals, but take a shot in the dark here in terms of the kind of move whether we could possibly expect if it is a positive budget for the markets.
I think, you can expect a move, because we have been rather tepid in the last 1 month. So any good news can be taken up by the market. But having said that, I think the Indian market psychosis or fear of the FI sale is just now so ingrained into us. And that's the challenge of the budget, is not an Indian investor. Indian investors already put money in it. However, the point is, how do you get the overseas investors to put money in this country? Sure. I think the challenge for the budget is to structure opportunities, framework, regulation, ease of doing business should be on the ground, that the money comes back to this country. We don't have enough dollars. So I think Indians are convinced to invest in India. You saw the SIPs, thousands of crore, lakhs of crore invested. Indians don't need to be convinced. The guy needs to be convinced, sitting outside and saying, Can you bring your investment here? And more important than FDI investment. We don't see people putting up factories here. We don't see people investing here. Can the budget put a framework around? And linked to that is what I keep saying, and I think Gita Gopinath's the same thing, is quality of life.
Yeah.
You can't get a foreign technician to come here if his AQI is 800 and his children to play outside. You won't come. Nobody will come. So I think budget should address the issue upfront and say how 70 or 75 most polluted cities will become zero in the next 5 years. Forget all development. The quality of life is most important. What will you do with development if you're dying of or your children are wheezing of asthma? So my mind, budget should be intrinsically focused on ease of doing business, get foreign capital here. The single litmus test for this budget and regulation is, will it reverse the flow of FDI and FPI, if you ask me. That's the single litmus test. Indian investors are convinced already.
Ajay, the good point there. Are defense stocks a buying opportunity ahead of this budget, given the expectations that the first full budget after Operation Sindoor will double down on the theme of defense, modernization and upgrades?
See, sir, theoretically what you say, model is correct. But practically speaking, how much of these orders actually flow to Indian companies? If you look at all the Indian private sector growth defense companies, they haven't grown in the last 1 year. Post-Operation Sindoor, pre-Sindoor, everything, the growth is pathetic. Or put together all Indian private companies, the total defense sale billing is not more than 3,000 to 4,000 crores. That's all. So, it's nice defense budget to go up. Problem is, we don't have the technology the defense wants to buy. You already saw what's happened to the aircraft. The Air Chief Marshal saying, listen, I need my aircraft like yesterday. So I think defense is a great story. But the real life story is, in corporate sector, it hasn't flowed to the Indian defense companies. They are too small, they're tiny, and number two, they don't have the technology. Therefore, theoretically, answer is yes, defense budget goes up. We should do well. The practical answer is, which are the companies going to get the orders? L&T sits on idle capacity at this point of time. So who is going to get the orders? The others are very, very small. Now, if you want to buy PSUs, I keep saying again and again, repeating ad nauseum, would you buy a car from HAL? Forget buying a plane from HAL. PSUs are not meant to deliver sophisticated technology product at the end of the day. So as an investor, yes, we have some investment in defense stocks, particularly PSUs, none in private sector. But answer is, will it be the way your portfolio will go? I don't think portfolio returns are going to come from these defense things. You might as well buy US Aero Defense ETFs. You'll do a better job with that because those companies are going to gain not as much as what we think Indians are going to gain.
Ajay, in terms of the sectors that you think are likely to be the most major beneficiaries and individual winners, if you could highlight them for us.
Unfortunately, it's a very boring story to be repeated again. That metal did well, PSU banks did well last year. Unfortunately, it looks like they will do well. And with this time, surprise or surprise, maybe the private banks, the two largest ones, may add to the ticker to do very well because they've been so neglected. They're really forgotten in the market. Maybe they will perform. So I think we have these two sectors. And third is autos. I think autos will continue to give us a good return because of exports are doing very well and rupee dollar being where it is. Auto should be the third on our priority. So it's going to be, if you ask me, it's going to be metal again. It's going to be PSU and private banks. Is going to be auto and engineering segment. I think these four are going to gain traction, continue to be good companies. And good part is you got a lot of good companies there. So very nice companies, good promoters, and let's not forget gold loan companies. I think no matter what happens to gold prices, those companies have a flyer on the hand. So you got to, part of the investment portfolio is the gold loan companies. I think they will do well. And you saw so much investment coming into new banks. I think 3 or 4 banks have got huge investment. Hopefully those investments will start to perform. Last point, the man which has lagged the most is the hospital sector. Corrected rapidly, may correct still more, but offers a great opportunity from a 3-year perspective.
So on autos, Ajay, just talking about the recent import duty cuts and so forth, we did see a reaction on that, and that was creating a little bit of havoc on the auto counters. Do you think it'll stabilize, or will we see perhaps some pressure on earnings on the back of increased competition?
Unfortunately, market is full of illiteracy, and therefore we, as Warren Buffett says, you got opportunities to buy and sell. Okay, the EU Pact will happen over a period of 9 months to start with. Okay. It has got a cap on the number of vehicles. Make cheap vehicles, but Indians buy mostly. So, so yes, a Mercedes may become cheaper and an Audi 7 may become cheaper. But will a Maruti face of music? Will a Mahindra face of music? The answer is no. They are producing at a price point where no one can compete with us in this market and bring a product to India, not even by chance. So I think markets are irrationally responding to an EU pact saying these companies will face competition. No, Europeans can't produce cheap cars. In fact, they should not be producing cars. They can't produce any cars anymore. And you may have heard it, that Germany stopped literally producing cars at the end of the day. It's just overrated. I think all has happened is that the very expensive cars are going to get cheaper. So if you are planning to buy one of the fancier ones, you can wait to buy your Lambo or your Ferrari. But I think barring for these companies, that's a very good point. That's a very good point. You know what happens in Gurgaon, right? They all drive it at 2 o'clock in the night.
But early numbers on the auto sales for the 1st of February, the numbers that are coming in are again very strong, Siddharth.
Yeah, absolutely. And the Sensex up 400 points from the day's low, and the Nifty also up. So markets recovering from their day's low. Minutes left for the budget speech, and very clearly you can see perhaps
I'm kind of excited about this budget because I know, we've got a Samir Arora saying it's a non-event, and we've got, even a Punita saying, I don't know what's going to be possible this time around. But this government, if it's managed so far to sort of maintain a fine balance and keep all things considered, I wouldn't put it past them to have some rabbit they're going to pull out of their hat.
Absolutely. And, I am not in the camp which says it is a non-event.
Exactly.
There is a rationale behind calling it a non-event, but Ajay, maybe you will also weigh in on this, but my feeling is that increasingly, if the government's spending instincts are to directly put cash in the hands of people, alongside doing robust infrastructure, we've seen the infrastructure story play out completely. Banking was spoken about. Ajay, you made that point. Look at the state of where our overall banking system and in terms of its health is. Compare it with 10 years ago when we used to be on shows in an earlier avatar, Abha, and with the headlines around NPAs, we would just be discussing NPAs day in, day out. You don't talk about that anymore. Now you are talking about where will the banking sector raise deposits from so that it continues to play a key role in driving growth. In our economy, the nature of our economy is that banks are becoming long-term financiers. Elsewhere in the world, it is the debt markets that fulfill that role. So Ajay, in fact, just on that banking point that you made,
it's a great
this deposit challenge, is that one of the biggest worries that our banking system has in the short to medium term?
It's a flip side to the story. You just talk about people investing in India's economic story. Now, the moment they stop investing in the economic story, they will come to the banks. All the problem with the banks is that RBI has artificially kept the interest rate down. And at that rate of return, 5-6%, you say, I'd rather put in mutual fund. Doesn't matter, 10% I got return. 10% means double the FD rate or 50% more than the FD rate. So that the challenge is that artificially keeping interest rates low have channeled the money into one sector away from the banks. Banks have a challenge of where to get the deposit from. You're absolutely correct that the deposit is the biggest today challenge for the bank. And they've been crying, saying equate us to mutual fund, which is a ridiculous argument. But the fact remains, and we are soundly believe, that India will be forced to increase interest rate to balance, one, this whole dichotomy of people putting money in equity and nothing in debt. And second is the FPI trying to come back to Indian debt markets. And we have a balance of equity in terms of savers and borrowers. Today, the whole equation is favoring the borrowers, not the savers. So you see the household debt is like multiplying like nobody's business. They don't know how they'll pay the money back. So the challenge is interest rates have to go up in the economy to put equilibrium to banks to get the deposits, to the bond markets to flourish, and the household borrowings to come down to a reasonable level, all to achieve. Unfortunately, the clamor is reduced it down. But I can predict you that interest rate will go up in the economy in the current year. Otherwise, the equilibrium is not going to be settled. And we need the dollars. We need NRI money. $330 billion of our borrowing is NRI money. We can't let it go away. Otherwise, who will plug the gap? So, so let's look at it. Out of 700 billion borrowing of India, 330 is NRI money. So therefore, interest rate play a paramount role. And today, the only thing holding back money going to the banks is the interest rates.
That's a very, very interesting take, Abha, and I must say this on record that Ajay, this is the first time I have heard such a passionate sort of argument for an interest rate hike, because by all conversations that I have had in the last quarter, and I'm including the month of January in that, Abha, nobody has been even remotely talking about an interest rate hike, because inflation is low, growth is pretty steady.
Yeah.
Goldilocks economy, a term that is frequently used. If growth is doing well and if inflation is under control, it's called a Goldilocks phase. Not exactly a hardcore economic term that hardcore economists talk about, but it sort of captures the mood of the moment. But as we stand by for budget 2026-27, let's try and bring you visuals from Parliament, because by my clock, just about a minute left on Nirmala Sitharaman's speech. You have the Lok Sabha feed, the new Parliament there on the screen. Once again, for the Finance Minister, the 9th outing to deliver a union budget, a budget of the size and scale that India has, a budget that aspires to reach and address 140 crore people, 1.4 billion people. In sheer numbers and in per capita terms, there is only so much that a union budget can do. But remember, one of the largest heads of expenditure that the government of India has, and these are all sobering realities, is interest payments on past borrowings. So borrowings, the numbers that will come out will be very, very significant. You can see the Lok Sabha speaker walk in and take his chair. He's going to now call upon Finance Minister to speak. There are sometimes
वित्त मंत्री श्रीमती निर्मला सीतारमन जी. Item number one.
Sir, with your permission, I rise to lay on the table a copy each of the following papers.